Hi Ruma.
Hey Fiona, how are you?
Good, thanks. So, how do you substantiate the income documents for a self employed person?
Okay. For a self employed person, so there are two ways we can look at a loan. One is your full documentation. So, full documentation is, let's say you're self employed, you run your own company, you run your own business, and you're obviously an individual. So, we need 2 years individual tax returns with the NOAs. NOA is notice of assessment. Yeah,
Yeah.
you know, notice of assessment is given by the ATO
Yeah.
after the tax returns are lodged. So without NOAs, they're not substantiated. So we have to give the NOA. That means that that's a proof that they've been lodged, unless accountant can write up a letter or something.
Okay.
So that's one way. Then let's say if you run a company. Now this is I was talking about, like, any person who is a self-employed, whether they run a company or a partnership or a sole trader or even a trust, they have a family trust. So you have to have the individual tax returns. Yeah.
Yeah.
If you run a company, then you need 2 years company tax returns, same 2 years, which is like for individual you've got, let's say, 17 and 18. So you need for the company 17 and 18 as well. And you also need to give the financials of the company of the same 2 years. That's important. If you run a partnership, for example, you also need partnership tax returns plus the individual tax returns. So individual tax returns are always there, whether you're a sole trader or a company or a partnership, or you have a family trust or whatever. Individual tax returns have to be supplied no matter what, right? But if you have a company, you supply 2 years company tax returns. If you have a partnership, you supply 2 years partnership tax returns, and so on and so forth. So these documents are very, very important. And most of the times I've seen that the clients say, oh, I'm earning, say, 200,000 a year, but when you look at their tax return, it's only 50, because the bank takes the net income. They don't take the gross, the profit. That's very, very important. You have to learn if you need to check the income documents. So always look at the net, not the total before the expenses. Bank will only take the net, because obviously you're declaring the expenses. Why would the bank take the total income, gross income, as in the servicing? Another thing very important, which Les and I we were discussing yesterday, was that banks never take dividends. That's very, very important.
Okay.
They will only take dividends if a company is listed on stock exchange. If people, they just get the dividends from, let's say, shares and things like that.
Yeah.
And if they've been getting it for the past consistently for the past couple of years, and that's their main source of income, then yes. But normally banks don't take that.
Okay.
So this
Yeah.
is how you, for self-employed, you substantiate the income or the documents.
Okay. Thank you.